Good morning, everyone. Welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks, and it's NVIDIA Day. We made it. You know, when large cap tech earnings came out about a month ago, we've been waiting for NVIDIA ever since then, and today's the day. We'll get those after the close today. Of course, on today's Daily Trader, we'll cover NVIDIA. We'll also cover their number one competitor, though a distant competitor, and that is AMD. Those are the two stocks we'll look at today. Two different trades, two different ideas for practice paper money trades on NVIDIA and AMD. First, let's get to our macro minute. Macro minute, we had mortgage apps come out this morning that were relatively mute, slightly positive, but the big story this morning was Target's earnings. Target currently sits down 20%. It traded as low as $121 this morning before recovering here to $123, but it's still down $31 on a miss across the board. Actually, their earnings per share was $1.85 versus $2.29. Big miss there in terms of EPS. Revenues, it was only a slight miss, $25.67 billion versus $25.9 billion, but some of their comments were very concerning, and now this looks more like some type of a valuation play because the trader's mentality here says maybe they've overdone it on the downside. I don't know for sure. I have no idea of knowing, but man, they've now got this down to a 12.8 PE and a 3.6% dividend yield in Target. So a recovery there, its ability to find its niche, not sure it's getting that done just yet because the same strength that Walmart showed in discretionary, they showed weakness in discretionary, and that's a big red flag for Target. Okay, we'll move on to our trades today because it's NVIDIA Day, and one we certainly want to spend a lot of time on, NVIDIA. Think about it like this. There are watch parties forming this afternoon in New York City to watch the NVIDIA's earnings release. It is a macroeconomic event happening today. Why? Think about the number of large companies that NVIDIA affects. They're big customers. Of course, AMD is one of their competitors. Microsoft, Tesla, Meta, Amazon, Google Alphabet, Oracle, OpenAI, xAI, Dell, Supermicro, all these companies. And there's more. I could name a list of 20 more companies that are directly affected by NVIDIA's earnings today and will move with NVIDIA. So NVIDIA's earnings today, a macroeconomic event that you have to pay attention to. Remember, earlier, a short time ago, Jensen Huang referred to the demand for NVIDIA Blackwell chips as insane. He also came out and said that their Blackwell chips are sold out. So I believe there will be a day where NVIDIA's demand starts to decelerate. That is the absolute, that date is coming. I just don't think it's now. I don't think that this is the one. And the other thing is, NVIDIA, if you look, it traded at over $140 in June 20th. It broke $140 and has either traded lower or consolidated ever since then, like NVIDIA has been known to do. Can it break through to higher numbers? Well, if the demand really is insane, if the earnings beat and the revenue beat is significant enough and the news and the guidance from Jensen Huang is significant enough, remember, it's consolidated for months on end here. So I think there's a real opportunity here, but there is a high bar, right? I mean, remember, the revenue, whatever the number is, whatever that number that the consensus is, I think it's $32.5 billion. They've got to beat probably by $2 billion. They've got to beat on earnings per share. They've got to beat on revenue, and they've got to raise the expectations going forward. Now, here's why that might happen. Morgan Stanley thinks that the revenue from the Blackwell chip for the fourth quarter will be $5 to $6 billion. Spear Invest thinks it could be $12 to $13 billion. There's your big play between how much revenue is coming in from Blackwell in the fourth quarter. Remember, this is a chip that has been slightly delayed from September to now. They're just starting to roll it out. And remember, it's the Hopper chip leading to the Blackwell chip that's coming out now. And then the Rubin chip, Jensen Huang has said, is in the future and getting ready to go. So they've got chips lined up. This is an incredible business story. But let's talk about the high bar. We talk about it a lot on the air here at the Schwab Network. The high bar in a stock that this has got a high bar. Even though it's consolidated for 5 months, the bar is still high in NVIDIA, and any weakness in any number could hurt this stock. So you've got to be extremely cognizant of the rhetoric coming out after earnings. Now, the paper money trade that we looked at for today was something playing for a bullish result, right? Going forward. That's the assumption that I'm making. I don't know what the result is going to be, but if you're thinking that this could be a positive result and the eventual deceleration is not happening anytime yet and not happening in 2025, frankly, this is an option play that you could use. And that is by the November 29th, 145 call, right at the money, slightly out of the money now that NVIDIA has sold off slightly this morning with the geopolitical risks that are out there this morning. By the November 29th, 145 call, sell this week's, the November 22nd, 155 call. So a $10 call diagonal. You see me doing these a lot lately because it's got about a 18 delta on this trade. So it's got risk. The risk is the debit paid on this trade. So if I've got it in there at 450, it looks like it's trading about 440 right now, just a dime lower than that. That's the risk on this trade. Make no mistake. This is a risk-defined trade that has upside potential, but the risk, because whatever the debit paid is your risk on this trade. So it's collecting theta, about almost $66 in theoretical theta per day, and you've got about, like I said, 18 long deltas. So an upside play in NVIDIA, and then let's look at its number one but very distant competitor, and that's AMD. And if you look at a chart in AMD, it's significant, and here's why. Think about everything we're talking about AI and chips and NVIDIA, and you look at AMD, and for the last 3 years, the stock's down 11%. The last 6 months, it's down 14%. Last 3 months, down 11%. This stock is underachieved. After it released its earnings, where it beat on earnings per share and beat on revenue, stock down 16% since that date on October 29th. Why? Well, because they've got very good news about AI demand being very strong for their AI chips and data center chips being extremely positive. 2 parts of the company doing extremely well. However, they've got 4 parts of the company, and that is gaming was down 69% in their net revenue, and embedded segment down 25% year over year. So 2 of the 4 segments of this company are struggling, and that is taking some of the upside potential away from data centers and AI chips. So there's the difference between AMD and NVIDIA. Doesn't mean AMD doesn't have a good story. Doesn't mean these weak parts of their company can't recover and start. Gaming's not going anywhere. Embedded probably not going anywhere. They're just more cyclical than right now the unbelievable market for data center and GPUs. So I did something a little more passive in AMD. Like I said, this stock is down 14% in the last 6 months. So it's not like it's, sitting at all-time highs. It's got an all-time. It's got a 1-year high of $227. It's at $137 now. I did something a little more passive there, and that is taking advantage of the elevated implied volatility that is in the front. Remember, NVIDIA's earnings are affecting all these companies, so they all have expected market maker moves based on NVIDIA's earnings. What I did, I went into the Nov 22nd expiration. My paper money practice trade for AMD is a short put vertical, taking advantage of the higher levels of implied volatility and selling the 136, 131 put vertical for $1.05 I've got up there. It's currently trading about $1.11. So AMD has sold off slightly since we put this trade in, so you can sell it now for $1.10, $1.11. Now the risk on this trade is the difference between strikes, $5 minus the credit taken in. So if it's $1.10, you've got $390 in risk on this trade. The probability of finishing out of the money for the 136 put currently sits at 62%, 61.8%. So it is a high probability trade. It is risk defined. It is collecting theta, and you're selling that elevated 61 implied volatility in AMD. So two different trades. One a little more aggressive on the upside in Nvidia, with the risk being the debit paid. In AMD, the risk is the width of the strikes minus the credit, a little more of a passively bullish trade in AMD. All right, that's our two trades for today, two practice trades for today in Nvidia and AMD. Have a great day, everyone. We'll see you tomorrow with another edition of Daily Trader. I am Kevin Hincks.